Hello and welcome. You're watching Countdown right here on Bloomberg Quint Live. We hit a fresh record high on the Nifty in early morning trade, post which we've actually come off quite a bit and not managed to rescale those levels yet again. We'll talk about the market mood in just a few moments, but for the headlines, markets are off the day's highs after scaling new record highs intraday. The Nifty trades below the 11,760 mark. Private weather forecaster Skymet says that the prospects of a below normal monsoon this time are higher due to the evolving El Nino. Oil marketing companies are the top losers on the Nifty after oil prices continue to trade near a 4-month high. And Metropolis Healthcare's 1,200 crore IPO is open for subscription today. The company's allotted shares worth 530 crores to anchor investors. Good afternoon, Neeraj. A brief glimmer of hope in the morning where we scaled the previous record by just 1 point and then came off.
Yeah, so officially it'll go down in record books as the day when we eclipse new highs. So instead of August 30th, now it would be April the 3rd. But the point being that the markets are in the green despite a lot of cues not being the most positive. As Ridham was saying, maybe that on the valuation front we are not as expensive, but the monsoon forecast from Skymet as well are failing to deter any kind of bullish sentiments that are there in the market. You could argue we've come off from the highs of the day, but it's 11,736 with what the rest of the Asian screen was doing. I think this is pretty much what one would have anticipated. Remember, we were talking yesterday about how ahead of the policy we would find it difficult for very large positions to be taken either direction. But let's wait and watch what happens during the course of the day. Mid caps and small caps, very quickly, the indices will come up on your screen and the market breadth will come up on your screen for just a moment before we move to the heat map. In the red, but ever so marginal, in fact, very, very flat for the small cap space. Maybe the reds overpower the green, yes they do. So slight bit of advantage to the losers in the session, the decliners in the session today, but slightly worse off than 1:1. In favor of the declines. The heat map, and I reckon out there it will be even Stevens. Almost even Stevens. A stock here or there, otherwise it's almost even Stevens. All marketing companies have lost out. I guess the higher levels of crude weighing in out here. Despite the currency trending, there's weakness out here. Z Entertainment continues to grind lower. This week, it would arguably be amongst the top losers. Third straight day now of a corrective move for Z. And Eicher Motors slides a little bit lower. So about a couple of percentage points lower for this one too. That aside, stocks like SBI, M&M from the rate sensitive pack in the red. What's doing well? Indiabulls Housing Finance doing well. Maruti Suzuki 2.5% doing very well for itself. HCL Technologies about 1.5%. HDFC, that is the heavyweight that is lending a bit of support. The HDFC twins, arguably the strongest contributors, and Bajaj Finance, yet another day of record highs for that one. But the mid caps and the small caps, the indices very, very quiet, Levina.
Yeah, so is the benchmark index. So today in all is a quiet day of trade within the broader market space as well. So just want to quickly run through what's been happening within the broader market space. And this is how the mid-cap top 100 look like. So the index is down about 0.25% or so. But you have gains in the form of Divan Housing Finance, and most of the housing finance companies are doing okay in today's session. Castrol is up by about 3.5%. Rajesh Exports, this is the second day on a trot that the stock's doing well. REC, Jubilant Life Sciences are some of your bigger gainers in trade. Prestige Estates does well. I want to actually look at, we'll come back and I'll take a look at the intraday chart of Godrej Properties. But these are some of your losers. Dish TV is down 2%. Punjab National Bank down 2%. The big losses for Amara Raja batteries coming in intraday trade post the cancellation of the agreement with shareholders. So that's going to be taking a big knock in intraday trade today. Union Bank of India is the other one that slips. A small cap index and some movers from there. You've got Future Lifestyle Fashions and heavy volumes at that. So this one gains about 3.5%. Credit Access Grameen, 52-week highs is continuously maintained it and traded around those regions. Then you've got a Sonata Software, Karuvesya Bank amongst the losers. Jet Airways, yet another batch of its fleet has been grounded, so I think now it's operating just about 15 to 20 aircraft. You've got Reliance Communications down about 4%. I was talking about Godrej Properties. That made a record high or a life high in today's intraday trade. The earlier high was about 920. I mean, the stock scaled up in early morning trade, had gone all the way up until 935, 938. From there, it's come off a bit, but nonetheless, 14 points higher, so still trading above 900 for Godrej Properties, looking strong over the last few trading days. But what's happening In the more liquid space, in the derivative space, Agam Vakil joins in for that. Agam, good afternoon.
Well, good afternoon. There's no doubt about the fact that there is buoyancy in the markets, even though we have seen the underlying theme, or rather the underlying currents, come off to a certain extent in the last 1 hour. There's 2% increase in open interest for the Nifty futures with buying, and when it comes to the Nifty banking futures, again we are seeing another 6% added towards open interest, towards fresh longs, so keep an eye on that. The India Volatility Index, which has been buoyant and it's rising further now, above 18.5, so we continue to see an up move there as well. But moving on to your options interest, so your open interest change, we are looking at more writing around the 11,700 put on expected lines, and unwinding in the 12,000 call, again on expected lines considering the indices are higher. Amara Raja battery stands out after with some problems with a certain order with Johnson's Controls. That's down a lot of selling coming through. BPCL is the other one with a lot of selling as well. In fact, all the OMCs are quite weak today. Jet Airways on account of more aircraft being grounded, down another 5.5%, so shorts there as well. And Marico perhaps an exception in this particular list, advancing with longs building into the system, so mixed cues coming in while the indices hold. Broader markets are looking at some amount of weakness at this point in time.
All right, Agam, thanks very much for that. And remember, Agam highlighted the India wicks being higher yet again. And over the last 3 weeks, you've actually seen the India wicks and the Nifty moving in tandem. It rarely happens, and it is, an indicator that there is a lot of hedges in the system, which could actually mean that the outlook may, there could be some amount of an overhang that the market is factoring in, which could cause some selling pressure building up. But overall sentiment positive. We saw market scaling fresh record highs, so no complaints there about. Let's begin with the big market voice of the day. Ridham Desai of Morgan Stanley thinks there is more room for a rally, and also that it's the right time to invest in auto companies. He said he's buying all of them, and he also mentioned the fact that while everyone's been talking about the valuations being steep, he feels that they're still not as rich. Hear him out.
The auto stocks are going through that November moment. Environment is not conducive prices. So I am bulled up on autos. I'm buying all of them. I think you will see that the data will turn. They've gone through idiosyncratic issues. I think they underestimated the impact on demand coming out of the liquidity crunch that the economy faced briefly between, say, October and January. So the inventory in the pipeline got stuffed, and now they had to wind that down. I think secondary demand is actually okay, but there's too much inventory, and consumers are very smart. They know this is the time when they can eke out discounts because people want to flush out the inventory. You had that insurance problem, then there are some changes happening to emission norms. So a few things got bunched up. I think they'll settle in the next couple of months. So I'm actually quite bullish. I think, now is the time to buy auto stocks.
So you don't think it's an NBFC problem with the loan dispensation, which is causing a little bit of a drag in terms
it was, and I think that's now the worst is behind us.
Okay.
I think in November, a lot of people thought NBFCs will collapse, and that's not happened. But NBFCs are certainly slowing down in terms of growth because whatever happened between September and January has forced them to increase liquidity on their balance sheets and increase capital, which means they have slowed down growth. And to that extent, demand has been affected, and some of that growth will be taken over by the banks. But NBFCs are probably going to grow a lot slower this year than they did last year or the year prior, or what was baked into share prices, say, in September. Now I think the markets are far more, I would say, pessimistic about NBFCs. It's not such a bad environment actually, because I sense that the central bank has shifted its stance. Dare say that central bank kept real rates a tad too high because they had an inflation target starting 2015. So it was but natural that the central bank was pursuing that target and to make sure that it did not miss it. It is possible that they kept rates a little too high, and I think we heard the RBI talk about this in the Fed policy, that their inflation forecasts have gone wrong, which is essentially that we were keeping rates for a higher inflation rate so that we don't miss the target. Now I think you've successfully met the target, and I think the recent actions from the RBI, like the dollar swap that they have initiated, to my mind suggests that they are a lot more accommodative to growth and inflation. So they are a little bit more relaxed about the inflation environment. So that's good for our NBFCs because liquidity, I think, will improve.
Actually, my question was more on the lines of the auto finance companies, the NBFCs there, curtailing offtake to investors who want to start making purchases in your cars.
Yeah, so I think the worst is over. Now, auto financing is not such a unique product for only NBFCs to pursue. Even the banks can do that. Yeah. So to that extent, actually, this is positive for the banks because some of that space which was being heavily competed by NBFCs has been vacated by NBFCs to some extent. Same thing in housing. So the large NBFCs or the banks who have got, or the NBFCs who have got good deposit franchise and are not hurt by this liquidity will gain share in housing finance as well.
2 or 3 other guests that we spoke to mentioned that their clients who are India dedicated funds haven't gotten major inflows. There's more ETF money that has come into India, which was not the case in February when the other EMs got the money. Is that the case? And therefore, part 2 of my question is, would you reckon that India dedicated funds will start getting in money looking at this outperformance, maybe looking at political stability or otherwise, and would that play a part in driving up what is already a very expensive market to even higher levels? And
also add to that, India dedicated funds, are they even that sizable, and will they get sizable apart from the fact if you remove them from the emerging market allocation that comes in?
Lots of questions. So firstly, I'll take the valuation one. So we'll keep that aside. I don't think the market is rich.
Why?
Yeah, it's at 3.2 times book. That's bang in the middle of its historical range of 2 and 4. Now you will cite me the PE ratio, but I've said this often in the last few quarters or few years that the earnings are very depressed versus history. So if you want to look at PE, then you normalize the earnings. Earnings are not secular, they are cyclical in nature. So it's not like a consumer staple company where the earnings invariably go up every year, and therefore PE is a good metric or is a reasonable metric. For the market as a whole, the earnings go like this. This market has seen an earnings drawdown, which is unprecedented in India's context. It was down 22% from peak to trough. That's a very big decline in earnings. Whereas over this period, if you use historical averages, the earnings should have actually compounded at maybe 13-14% every year. So that's a big fall in earnings versus trend. And how do we know this? We measure the profit share in GDP, and that's actually at the level that it was last seen in 2001. So the market is not rich. I don't think it is cheap either, but it's somewhere in the middle. So it knows kind of that the earning cycle is going to turn, but is not fully pricing in what could be a ferocious earning cycle over the next 5 years.
Okay. Well, let's see. For now, though, the markets have come off quite rapidly from the highs of the day. We are now now trading absolutely flat. For a brief moment, we even dipped below in the red, but flattish day is how you would sum this up. Let's see what happens over the course of the next 1.25 hours. Just very quickly, just want to pull up the turnover in the session today, and let's see. Penultimate day to expiry, but on a day when the Nifty is at life highs. Do we have excess turnover? No, not quite. Par for the course. You'll probably end at about 35,000-40,000 odd on the NSE cash. F&O volumes could nudge about 9 lakh, 10 lakh crore mark. So higher than normal, but acceptable on a day like this. Let's move on to the next conversation. The Center for Monitoring Indian Economy, or the CMIE, has come out with a note where it expects new investment proposals to fall to 14-year lows. New investment proposals are likely to be less than $10 trillion, according to the note. That and lots more to be discussed, and the factors, of course, behind all of these and the implications thereof with Mahesh Vyas. He's the Managing Director and CEO of CMIE. Mr. Vyas, so good having you. Thanks much for joining in. It's interesting how the data suggests something that is in stark contrast to what people in the market would want to believe, that the capex revival and the order flow will shoot up in FY20. What have been the couple of those key things that have stood out for you when you guys have done this study?
Well, what we have done is we have looked at the projects which are being announced by companies and by the government and foreign bodies, all kinds of people who are suggesting investments into India are tracked by us. We have been doing this for the past 25 years. So this is a long time series, long study that goes on continuously. Every quarter we come out with a snapshot of where we stand today. And what we see at the end of March 19 is that investment proposals have come very low. So the year is likely to end with investment proposals, new investment proposals, down to only 10 trillion. In 2011, we used to see 25 trillion rupees worth of new investment proposals. So this is really a very sharp fall. Last year we had seen 11 trillion rupees worth of investments, and that was a 13-year low. Now we are seeing a 14-year low at 10 trillion. So there are no new investments really happening in the country. The private sector in particular is extremely down on making new investment proposals. The few investments that are coming are mostly from the government sector. The ones which are coming from the private sector also have problems because, for example, some of them were to buy aircraft which they can't buy anymore. So I think we'll have to wait for some while before capacity utilization picks up, and then hopefully investments will come back again.
Mr. Vyas, if my memory serves me correct, I remember the conversation at the time of the 2014 elections, 6 months or 9 months before, was of the similar nature. Excuse me for not remembering the extent of the impact and the data thereof, but the belief was that until the elections come through, private sector will be wary of making any fresh investments. Would you reckon that this time around the reasons would be the same? Uncertainty about what will happen end of May or May 23rd, keeping the private sector away from making fresh announcements, and moves would only happen post that. And therefore, would economy watchers take this in their stride? Because this would probably typically happen 3 months or 6 months before every large election.
See, that depends upon the kind of investments we are talking about. If we are talking mostly about investments that are into government clearances sensitive sectors, like it could be into projects which are environmentally sensitive, those which are heavy on government clearances, say big power projects or big metals projects, then you are dependent a lot upon the government and the government's inclination to clear projects quickly. But if you're setting up a plant which is, let us say, manufacturing automobiles or something of that kind, then what matters most important is that whether there is going to be good demand for the goods you're going to make. So I think in 2014, a lot of the projects were of the large, bulky kind of projects. Those were more sensitive to government clearances. In 2013 and in 14 as well, the big talk then was projects getting stuck on environmental clearances, projects getting stuck because coal availability, iron ore availability, gas availability were all into sort of a mess at that time. And partly because Supreme Court had put restrictions on these as well. So that's not the situation now. We don't have Supreme Court restrictions on coal and iron ore, for example. Right now, the problem is to do with demand. So according to the RBI's OBCUS, we see capacity utilization only around 74–75%. Plant load factor of thermal power plants, for example, is only around 60%. These are very low numbers. So the factors underway right now is not the same as what we saw in 13–14. Governments are less relevant now compared to what it was in 13–14. Now what's important is demand, and I think that's what's going to keep the investments low. We will have to first see that capacity utilization does pick up, and then we can see investments come back.
Mr. Vyas, good afternoon to you. Is there a stark difference that you're seeing between the public sector and the private sector and the constraints that both of them face individually? And moving forward, when do you actually expect the capex cycle to pick up meaningfully if you do anticipate a big slowdown in new proposals currently?
The one difference between the investment boom of 2004-05 through 10-11 and the one we saw after 14-15 is that the private sector played a very big role in the 2004-05 through 11-12, 12-13 as well. The role of the government was relatively lower. Private sector investments accounted for 2/3 of the investments, and the government was only around 1/3 or so. Now, from 14-15, the government is more than 50%, and in recent times, it's even crossed 60-65%. So the private sector is clearly a lot less enthusiastic in investing in these few years. It's largely government that is pushing the investments, and these investments are mostly into roads, airports, airways in general. So it's infrastructure building where the government has focused, which is a good thing to happen. There has been acceleration in road development and even airports, for example, but the private sector has not shown any great inclination. And I think that's to do with the capacity utilization I was talking about earlier.
Does that change anytime in the near future, according to you?
Well, there'll be many factors. The most important thing is going to be whether the rains will be good this time. We will have to see some improvement in rural incomes because agricultural prices have been very low for a very long time. We will have to see some improvement of some kind on jobs at least. Only if demand from the consumer segments does increase, and possibly if there's some demand in exports growth, there has to be a demand for goods for investments to come back again. Currently, there are no signs that investments will pick up on their own for some time. And therefore, it may be good that even if there is a good crop coming year, if agriculture prices do go up, the new government needs to take some steps in itself to push up demand. So I think we will have to be a little more expansionary in our fiscal policy than we have been in the last 5 years.
Skymet, if anything, has poured some cold water on the hopes of a normal monsoon. They've said that El Nino remains a clear and present danger this time around. In light of that and the IMF commentary or the general commentary around what the world growth numbers would look like as well, would you expect that the revival could come anytime soon? And the follow-up to that would be, any kind of revival, would it necessarily need to be government induced in a scenario where the world might be slowing down? Or do you think it will depend largely on how the global economy does and the sentiment shift that happens as a result of that?
We cannot bank entirely on the world economy picking up. I would very strongly recommend proactive steps by the government to revive investments. We have not seen private investments for a very long time, and this has an impact upon the economy as a whole, particularly on jobs. So I think it's very important that the government takes this growth acceleration, and particularly investments and investments-driven growth, by itself spurring investments, creating an environment that the private sector comes back to investing aggressively. So it's one thing, and the current government, mind you, has done pretty well on infrastructure investments like roads and airports I was talking about earlier, even railways. But as we can see, that's not enough. Building infrastructure is good, but not enough. One needs to do more to enthuse the private sector to invest in a big way. And I think there's big scope over there. It's important for the government to figure out how to do it. That is necessary. Investments are not going to happen on their own. Even if there's a good rainfall, if agriculture prices rise, if global markets are good, if everything is good, even then, I would not entirely bank upon this being sufficient for investments to come back. I would very strongly recommend a fiscal policy push to fix the problem.
Okay. Mr. Vyas, really appreciate you taking the time out and joining us for this quick interaction. And look forward to having you more often on Bloomberg Quint. That's the view from CMIE on the report that they recently came out with. Order flows don't look like picking up in a hurry. Well, the market doesn't seem like picking up in a hurry too, lying absolutely flat, marginally in the red for the Nifty and the Nifty Bank. Good time to get a sense of some of the most important pressing issues for the day. Start off with a couple of stocks and how well or not well they have done. Amara Raja has not done well. It's seen its biggest intraday fall in over 6 months today after it called off its license agreement with Johnson Control, the co-promoter of the company. This after Johnson Control sold its power business to a clutch of private equity investors. In turn, has triggered concerns over its stake held in Amara Raja as well. Yatin Mota is here with the details and what are analysts making out of it. Yatin, firstly, what are the details? What is your first thought of how this would impact Amara Raja? And have any of the brokerages been sanguine about it?
So, Neeraj, let me give you a background first. This goes back in 1997 when, Amara Raja, the Gala family, which is basically the promoter, Indian promoter entities, had an, shareholder agreement with Johnson Controls. As of, yesterday, Johnson Control and the Indian promoter family held 26% each. Remember in 2018, November, Johnson Control decided to sell its, power solution business to a clutch of private equity investors, which include Brookfield as well as CDPQ, the Canadian Pension Fund. Today, the company announced to the stock exchanges that it is terminating the license agreement, the technical know-how agreement, as well as the shareholders agreement between the promoter entities, which is basically the Indian promoter Gala family, as well as Johnson Controls. Post this announcement, we saw a sharp cut coming in the share price of Amara Raja, as people started to speculate the fact that if at all Johnson Control is selling its power solution business, ideally the stake would have been transferred to Brookfield and Brookfield would have continued to hold the shares. But what has happened is that promoters bought 2% from the current promoter, which is Johnson Controls. Since the deal is yet to get completed, June 30th, 2019 is when probable the deal of divestment of Johnson Controls power solution business will happen. Before that, a 2% transfer. And more importantly, people are now guessing if at all Johnson Control wants to really hold this stake, will they sell it in the open market or will the transfer happen to Brookfield? And even if the transfer happens to a company like Brookfield, if at all they're interested in holding those shares. So there are multiple concerns on Amara Raja. We tried to contact everybody. We sent emails to Johnson Controls as well as Brookfield, CDPQ. We called up the management, Indian management of Amara Raja. We did not get a clarity or a firm answer as to whether or not this stake would be sold in open market or would continue to be as an investment for the new buyers, which is basically the Brookfield and the clutch of private equity investors. Today, Morgan Stanley post the event came out with a note. They said that there will be no material impact. More importantly, the company also said that there will be no material impact on the operations of the business after the termination of the agreement. But Morgan Stanley did say in the note that it is to be seen how really does the transfer of these shares happen, if at all moving forward between Johnson Controls as well as Brookfield. And if the transfer happens, what happens to the investment? Does it get sold on or is held as an investment? So these are the questions. The market is panicky given the fact that they believe probably there could be more sale in the open market, but it is too premature to say whether or not that will happen given the fact that there is no clarity either from the Indian promoters or the suitors for this business.
All right, nonetheless, making 2-year lows on Amara Raja, the stock price picking up from the lows of the day though. Thanks a lot for that, Yatin. It was down almost 9%, now it's down about 7.5%. The other one in focus is NMDC, which has cut iron ore prices by 5% after undertaking a hike in the month of February. Nikki Mirchandani is joining us with more details on the same. Nikki, prices remained unchanged in March, so what led to the cut now?
Sure. If you look at the financial year as a whole, or maybe the start of the year, NMDC just in the month of mid of Feb apparently went ahead and undertook a price hike. That's also because of the kind of sentiment that was seen globally across iron ore prices after the Vale's disaster in Brazil, which led to an uptick. But that in turn was just an aberration of sorts, because again the kind of price cuts trend has resumed back for the industry. Immediate news trigger for NMDC today is a 150 rupees per ton price cut that has been reflected or implemented both for lumps as well as fines. fines for lumps, the prices have been slashed to 2,850 per ton from a figure of around 3,000 per ton that we were looking at in the mid of Feb or towards the end of Feb. In March, effectively, the prices remain unchanged. And for iron ore fines, the prices were reduced again by 150 rupee per ton. That is a figure of around 2,600 ton as compared to 207.60. This price cut, we spoke to the management of NMDC. They said that it's primarily coming on account of drop that we've seen in international iron ore prices for the month of March. And Odisha mine players, who have the majority of the private miners category, are supplying in excess of the market and also reducing the prices of iron ore, which in turn had a bearing even on NMDC. Odisha miners have gone ahead and taken a price cut in the range of around 200 to 400 rupee per ton. Effectively, if you look at the complete 1 year price trend, in this month the reduction is to the tune of around 5% after a 3% hike which was implemented in 5. And if you look at from Jan to April period, overall we're kind of seeing a cut of 2% on iron ore prices. Back to you.
All right, though NMDC has not reacted in terms of the stock price move, but we'll certainly keep that in mind. 105 on the counter right now. Moving forward, changing regulatory environment, a liquidity crisis and subdued growth. Corporate India has had its share of hurdles in this financial year. But despite all of that, half the Indian companies are expected to report a margin expansion. Samit Sarkar is standing by with the biggest margin changes priced in by the market. Samit.
So if you see, nearly 80 of the 163 companies that are tracked by at least 15 analysts, and the companies, excluding the companies that belong to the BFSI sector, are expected to report a margin expansion in financial year 2019. Now, among the stock that will see the highest margin expansion in FY19, Coal India tops the list because the company's FY19 margins is expected to be the highest in the last 3 years, mainly benefiting from price hike and strict cost controls taken by the company despite inflationary pressures. Now, in FY18, the company had a one-time non-recurring employee expense due to increase in gratuity ceiling, which impacted its margin, and that's the reason you can see such a high margin expansion for Coal India. Now, for Godrej Properties, higher sales both in terms of value and quantity is expected to boost its margin in FY19. Also in FY19, due to Ind AS 115 implementation, high margin sales of residential property will also aid the company's margins. Now, third on the list is Steel Authority of India Limited, which will see an improvement in its margin on the back of strong steel pricing environment and operating efficiencies led by lower raw material cost, better product mix and lower employee cost. Now, for SAIL, if you see, the FY19 EBITDA margins are also expected to be the highest in the last 8 years. For Prestige Estates, higher rental income and increasing revenue contribution from high margin inventory is expected to boost its FY19 margins. And lastly, for Dish TV, its merger completion with Videocon D2H is expected to boost the company's EBITDA margins as it will realize synergy benefits in back-end IT, marketing cost and infrastructure. Now, among the stocks that will see the biggest fall in their margins, Vodafone Idea tops the list as its higher cost and lower revenue due to competition in the telecom market will lead to a drop in its margin. Second on the list is Engineers India. Now, a change in revenue mix is expected to lead to this drop in EBITDA margins for the company. Now, in FY19, the company is expected to see a lower portion of revenue coming in from the high margin consultancy business, and that's the reason the company's margins are expected to fall. Now, for Bharti Infratel, a higher energy cost and tenancy cancellation due to which resulted into lower revenue will result into lower margins in FY19. For Shree Cement, higher freight cost, higher power and fuel cost due to an increasing petcoke prices and higher other expenses due to foreign exchange losses will lead to a lower EBITDA margins. And lastly, for Indigo, margins are expected to be lower in FY19 due to weak ticket prices, rupee depreciation and higher fuel cost. Also for Indigo, if you see, the FY19 margins are expected to be the lowest since financial year 2014 for the company.
Right, Soma. Thanks very much for that. We're already seeing some of the stock prices soaring on the companies where the market is pricing in a margin expansion, one being Godrej Properties. Let's bring in our market experts then. Ruchit Jain of Angel Broking is joining us on the show. Shortly, we'll be joined by Yogesh as well as Manav, taking us through the fundamentals and technicals as well. Ruchit, I'll come to you first. Let's talk about the Nifty, and today just a touch and go record high for the index at 11,761, but not managing to sustain. Is that a precursor to what we could see following in the next few days, where there could be some more profit taking off the table?
Yeah, hi, very good afternoon. Well, if I look at the some of the positional charts on the Nifty front, then since the start of the March, we had an impulsive up move, and right now, as per the Elliott wave analysis, we are trading in the fifth wave of this up move. There has been some negative divergences seen. Firstly, in terms of RSI, we have seen that RSI has made a lower top in spite of Nifty forming a higher top in last few trading sessions. So this is one of the negative divergence. And the second divergence is the market breadth. In spite of the index hitting its all-time high, the market breadth today has turned negative. So these are the indications that we may see some sort of profit booking in stocks which have seen very sharp run-up in last 1.5 months. And on the index front, we can see some consolidation phase which would relieve these overbought momentum readings as well. So at least for now, in next few trading sessions, we believe that index would trade in a range 11,630, which was the gap area created on this in this Monday's trading session, is the short-term support to watch. In case 11,630 is breached, then we may see extension of this profit booking as well. But certainly there would be very selective pockets which would now show outperformance or an up move. Metals and selective IT, that we are expecting some names from these two sectors to continue their uptrend. So maybe the banking and the mid caps which have rallied significantly in last 1 month would see profit booking, and the flows could turn towards metals and selective IT names.
All right, we'll come back to those individual stock ideas, Ruchit, but let me bring in Manav Chopra of India Bulls Ventures, who's joining us on the show right now with his index calls. Manav, the Nifty as well as the Bank Nifty?
See, the markets have actually already seen a good amount of rally recently, and in past couple of trading sessions there are formations which are hinting for some near-term consolidation, and that is what we are expecting in the near-term perspective. We have some important policy event lined up, and post that also a good amount of events which are also lined up this month. So I sense it's also a good time that any investor who's bought into this, it's a good time to book partial profits, take some money off the table. Specifically for Nifty on the upside, 11,800 are a series of resistance, and here is where there could be some sort of a profit booking that would eventually come into the picture. The immediate support for Nifty on the lower side is at 11,600. If that is breached, some short-term profit booking will definitely come into the play. And for Bank Nifty specifically, 30,100 is the important support zone, and that also coincides on the weekly support level. So we can expect some sort of decline once that is breached. So at this level, keeping a risk-reward ratio, I think, does not favor for any fresh longs, but one should definitely be cautious, and once if the support is breached, expect some corrective declines.
Okay. Some stock ideas then, both from Manav and Ruchit. Ruchit, I'm going to start off with you firstly. NIIT Tech is on your buy list along with the Tata Steel.
Yeah, so as we spoke about sector specific, we expect some outperformance from metals and some selective IT names. Tata Steel has been on my buy list because if we look at the daily chart, then after a consolidation of about 2 to 3 weeks, the prices have given a breakout early this week, and the up move has also been continued with a continuation gap. Even if you look at the today's trading session, there have been open interest built up of 5 to 6%, which indicates fresh long formations at current level. So we expect this trend to continue. Short-term traders can buy with stop below 528, expecting near-term target of 565 to 570. And NIIT Technologies within the mid-cap IT space has shown a good outperformance if you look at the weekly or the monthly charts. Now, last 2 months, the stock prices have already seen a consolidation phase, but there was not a price correction. So this is clearly indicates that the time correction was there, and the kind of volumes have started increasing in last 2-3 trading sessions. We believe that from here on, NIIT Technologies should resume its uptrend in next 1 or 2 weeks. So traders can go along. The risk reward ratio is quite favorable at current levels, with stop below 1315, expecting target around 1400.
All right, got that. Quite a lot of IT names, making a mention amongst technical analysts that we've been talking to over the last few days. Yesterday we had Infosys and TCS. Today NIIT Tech and HCL Tech. HCL Tech, in fact, happens to be Manav's buy call. Manav, HCL Tech, and the other one is SAIL.
Yes, in fact, if you look at the charts for IT index, it has been in overall a 1.5 months of a consolidated decline, and it's breaking out of its falling channel. So usually we have seen in the past a good sectoral rotation, whereby now Bank Nifty could see some sort of a consolidation and IT index could take over. This is a broader index play which is expected to be seen for next few weeks. So keeping that in play, HCL Technologies is one of our top picks. The stock has seen a breakout from its levels, from its weekly and monthly resistance levels. The momentum is still in the buy mode, which further indicates that this rally would have some more amount of throttle on the upside. On the immediate basis, 1100 is the stop loss for HCL Technologies. We expect an upside target of 1170. The other pick is SAIL. In fact, the stock has been a complete underperformer since quite some time and is bouncing from its monthly support levels. The volume built up at the current juncture is indicating that short-term bottom is in place. So we expect this near-term rally to continue and probably test the 200 DMA on the upside. The stop loss can be placed at 56 for an upside target of 64.
Okay, got that. Lots of stocks there to keep an eye out on. Yogesh Mehta of Motilal Oswal is also joining us on the show this afternoon. Yogesh, good afternoon to you. Obviously, it was heartening to see the index make record highs early morning, but losing steam equally fast by the end of the trading session. In fact, now down in the red for the Nifty 50. What is the sentiment like right now in terms of whether or not to deploy more money at these record highs or no?
Yeah, Devina, good afternoon. Since we have seen a good ride of March month for Nifty as well as the stocks, and of course this time with mid caps and small caps to a certain extent. Now today being eve before RBI meet, where people are expecting a 25 basis points, 50 basis points rate cut to boost economical growth. So that may have a good opportunity again here to encash your profits, because it is always something like buy on news and sell on buy on rumors and sell on news. So probably the unfolding of event may turn out to be a profit booking opportunity for the traders, not for the investor, of course. It is for the traders. So that might have led this selling spree in last maybe last half an hour from current time. And we have seen similar yesterday. It was a sine cost wave. Yesterday it was a last 1 hour buying, and a day before yesterday it was the last hour of selling. So it may continue with the trading psychology and the mentality, but yes, it shows that market sentiment and that sentiment of the trader, that they don't want to carry forward their long or the short positions in the market. Rather, they will prefer to close that for the same day. So that's why we have seen this sine cost wave. But yes, I understand it is disheartening that after 11,760 of lifetime high and with a sharp run up of whole March rally, market is now started with a good note on the financial year, but now it is bit of it is showing some kind of a sigh of relief for bears, and markets are not going on a higher side, because one of the reason could be that the rally was entirely dominated or contributed by a very few handful stocks, not by the broad market. So probably that could be the reason that side counters are not moving, and probably we may see some profit booking from this level.
What's the conversations been around oil marketing companies today, Yogesh? They've been under pressure for a number of days. In today's session too have corrected.
Yeah, Neeraj, since it is totally now, the OMCs I've earlier also mentioned, that OMCs have become now cyclical. It is all depends on the crude oil prices, whether they are going on a higher side or the corrective mode. Now near to 70, 2019, 4 months high level of crude prices, and probability that they may not incur profits for what they are doing right now. The scope of making more profits seems unlikely, or maybe not impossible, unlikely. So probably that is driving factor for the sentiments and the prices of oil marketing company. But definitely at lower ends, earlier also we have seen from 260, 250, and now it is in the range of, I'm talking about BPCL, and now it is near to 400 level. But it would be again the same psychology that on the higher side, nobody would prefer to buy rather than to exit from the portfolios for this kind of oil marketing companies, because the global scenario is not in favor of softened crude prices for at least for next 1 or 2 quarters, and will remain here for 60 to 70 range. So probably we would avoid, yes, definitely we would avoid from this juncture. If it is at lower level, we we may see further, because one more hangover is still there, Neeraj, that the subsidy burden is still there and it has not been taken away by the government, and that's why unless and until we see some drastic change in the policy for OMC companies, probably that hangover will remain there for the will remain there as a resistance for higher levels.
Okay, Yogesh, stay on. Are the experts as well? Request you to just stay on. Let's move to a very important conversation. Skymet has said that there is a 55% chance of a below normal monsoon this year. The private weather forecaster attributes the formation of an El Nino in the Pacific region for their prediction. Joining us now to talk about the forecast in greater detail is GP Sharma, the Vice President of the Meteorology at Skymet Weather Services. Mr. Sharma, thanks so much for joining in. We heard your press conference, so that is sorted, but if you can explain in a nutshell, what is the key factor for this year's monsoon, and how high is the probability of this happening? In the past, when such formations have happened, how have they led to eventually? Is that a way to kind of speak about that?
See, this year's monsoon, it's under the shadow of El Nino, I will put it that way. Okay, the threat which earlier we thought is receding in the month of January, February, it didn't happen so, and then the conditions remain good to have a moderate El Nino even at this point of time, as the Pacific is warm enough, strong enough to have these indices beyond the threshold values. Okay, at the moment also the values are close to about 1, which is significant, and then there definitely leaves a lot of scope for the monsoon rain to get dampened, particularly the first half of the season, June to July. It is going to be very sluggish, and then it will impact the monsoon rains. As it happens during the El Nino years, the rains, they go slow. The only difference this time is it's a little devolving El Nino. That means the El Nino strength will keep on reducing as we go through the monsoon season, but then even that effect, it shows that strength is going to be at least about 50% or more even during the monsoon months. So it doesn't bail us out completely on account of El Nino to have the bountiful rains of monsoon. It's going to be a little dampening, and that's how the normal forecast for the monsoon from Skymet is 93% of long period average, that is June to September, of 887 millimeter. So that's our projection, with the fairly above normal, the chances now of having subdued rain. Okay, below normal rains chances are more than about 55%, and then even month-wise distribution also, when we say June and July, they are going to be below normal. The chances are more on that. Yes, please.
When you talk about June and July being below normal, is that substantially lower? How does the formation happen, and what factors, if at all, it's possible to predict, could change this? Because, you know, for the benefit of a lot of our viewers who are watching this interaction right now, Mr. Sharma, they would believe that it's too early right now to be able to predict. A lot of times we predict something and then it changes. So I just want to put that into perspective. What's the percentage of certainty of such an event happening? And when you say 93%, when was the last time we saw something of this magnitude occurring?
Yes, this 93%, obviously it falls in the category of below normal rains, and all this is in connection with the El Nino conditions which I mentioned a little while earlier. Say during the monsoon there are some other factors also which become important. They do play a role, possibly significant role also. The most popular out of them also is the dipole mode index, which is the IOD also, which we call it as. And then the other one is the MJO, Modern Julian Oscillation Index, that is also there. But El Nino is the strongest one out of these. IOD, yes, it comes up around the month of say June or so. At this time the indications are that this index is going to be normal or remain in positive. That's a one good news. And if it's a strong IOD, sometime it partly neutralizes the effect of El Nino. It cannot completely wipe off its overall impact, but then partly it can come to the rescue. As far as the MGO is concerned, okay, modern Julian oscillation concerned, it's firstly, it doesn't come more than twice or so during the entire monsoon season over our region. At the most, if you extend it, possibly sometime third time, but most of the time it's only 2 occasions, and it stays for about a week or 10 days in one stretch. So it doesn't have a very prolonged role to stay. And as it is when the El Nino conditions are there, MGO strength, it remains generally on the low side. But then still we have to look for these two factors, IOD actually during the monsoon months, and then even the MGO also as and when it visits. The conditions as of today are that June and July, I again say it's going to perform a little poorly, and then recovery months are August and September. August being shared better than September, both ending close to the normal range of rainfall. That's the Skymet projection at the moment. Yes, please.
Right. So just one last question, Mr. Sharma. With regards to the drought prediction, that stands at about a 15% chance of a drought. And also, could you give us a state-wise impact if you've done that analysis as well?
Yes, state-wise impact, as I said in the beginning, the large risk or the bigger risk is for the central parts and the eastern parts of the country. Precisely, I will say they are Bihar, Jharkhand, West Bengal region. Adjacent to that is also parts of East UP and also the central parts, wherein most parts of Maharashtra will be there, adjoining Madhya Pradesh region will be there. We also expect a risk over the north interior parts of Karnataka also. These are the portions which are at bigger risk. The safe pockets which should perform well, that is the Orissa, Chhattisgarh, coastal parts of Andhra Pradesh. Adjacent, possibly East MP region also should be performing better than the normal. The other pockets, a slight risk in the northeast India we see in the first half of the season, improving later in the second half. The northwestern parts of the country, in any case, they see curtailed duration of the monsoon, just about 2 months, because the monsoon comes only in the end of June and departs also in the month of September in the beginning itself. So 2 months performance, but it should not be disappointing one for the northern parts, which consist of Punjab, Haryana, including Delhi and adjoining Uttar Pradesh region. It should be fairly okay. Satisfactory performance should be landing up finally within the normal brackets or so. Peninsular India, southern India, which doesn't see good conditions to start with, that's the month of June and July, possibly will remain mild for that, but catch up later in the month of August and September, and particularly in September, the South Peninsular India, which we consist of Tamil Nadu, parts of South Interior Karnataka, Rayalaseema, Kerala. These are the parts which possibly will see some good rains in the second half of the monsoon. Yeah, that's our Skymet's assessment.
All right, Mr. Sharma, we'll leave it at that. Thank you so much for that detailed report there coming in from Skymet with regards to the progress of the El Nino and the below average monsoons that we could expect this time around. Back to the markets then, and the BPCL is still your top loser on the Nifty. It's down about 4.5%. Z follows that. That's down 2.5%. Bharti Airtel sees a slump in trade today after yesterday's big 5% uptick, and L&T is back below 1400 at 1381. Yogesh, I want to come to you on Reliance Industries. We've seen the Motilal Oswal report on Reliance Industries. You know, why have you taken this call on Reliance Industries? I mean, considering that they've been firing on all engines at this current point in time.
Yeah, Devina, this time for a change, Reliance, what we have analyzed that the telecom business, the retail, both are doing very well, and even the Jio, the way the growth has happened in the subscriber addition, maybe we can consider that FY19 average would be 11 million, and for FY20 we are projecting that there would be a slowdown in ramping of the subscriber base because of the higher base effect. So it could be a 6 million subscriber for FY20 per month. So that will give 33.5 to 34% market share for Reliance Jio. So that gives some kind of a relaxation that growth will not be there, because we don't foresee that ARPU per se for FY20 would increase significantly from here. There could be a minor 2 to 5% incremental change into the ARPU. So that will not contribute much to that. Secondly, on the refining margin, we believe that now post this China, the additional capacity of Reliance, and it is fully priced in. Even when we compare with the global peers are trading at around near to 6.5 times EV to EBITDA, wherein Reliance itself is quoting at 7.5 times EV to EBITDA. So comparing those factors into the considering those factors, we believe that now upside for Reliance would be difficult, and perhaps I would say that it is trading at a historical highest valuation so far in its history probably, and that's why we are believing that that kind of re-rating is not on the cards right now at this point in time. So probably with 83-84 rupees EPS for FY20, and currently it is quoting at near to 1400 levels, so it is fairly valued, or maybe fairly valued, so it will not leave any headroom for investors who will enter at this level of 1380 or 1400 level. So it is very difficult to make 15% return from here, seems difficult. So we believe that it should be a neutral rather than a buy from current levels.
Just one final, before we take that break, one final question in this segment, at least to you, Yogesh. Maruti Suzuki 7000, are you a buyer?
Neeraj, the way we had been gung-ho about Maruti for incremental sales for annual sales of run rate of 113 to 130, then 140, then 150 and 160. So that is tapered down now. So we have cut the EPS estimate for FY20 and 21 by 8 to 10 percentage point. So 7,000 level currently, this price is because we have seen a good number in March at 1,42,000, and probably April would be at around the similar level, 140 to 150 in between this. So we are considering that numbers into this, but we have cut our projected price target, though at 7,000, I would say 7,000, 6,500 would be a good bet for investors in Maruti. So definitely yes, we will be a buyer, but upside, which we had earlier projected 10,000 plus, would be now around 8,500 to 8,600 in between.
The markets are now trading at the lowest point of the day, 142 points off for the Nifty Bank. This week's chart for the Nifty Bank would be important because aside of yesterday, wherein it bounced back a little bit, it has been weak. It was weak on Monday. This is a 7-day chart, but it was weak on Monday. It kind of leveled out on Tuesday, but in today's session as well, looking slightly wobbly, and Friday's trade too was a bit of an iffy afternoon for the Nifty Bank. Manav Chopra, come to you on the Nifty Bank, because that will have a big impact on what the index does itself too. How do the charts look here?
See, from last 2 or 3 trading sessions, we have definitely witnessed a consolidation move, and it's still holding on to its important support of 30,150. So Neeraj, in case if you breach 30,150 on the lower side, is when you can expect a corrective decline coming. So this short-term decline can eventually have the next support. If 30,150 is breached on the closing basis, the next support for the index would be close to 29,600 to 700. So we could see a short-term decline of at least 500 to 600 points, and I don't think that could be a big cause of worry for any investor. But yes, for a trading perspective, these levels are good time to book partial profits, and one should definitely reduce your aggressive long position on a trading bet.
Okay, and Ruchit, if we just look at what's dragged the index lower in the last few minutes of trade, has to be banking names. Anything within the banking index that looks slightly vulnerable?
Neeraj, we have seen that when the markets went up, the Bank Nifty and the mid cap, these two are the sectors which have shown outperformance. So if there is some kind of profit booking coming, then definitely it has to be in those sectors which have shown outperformance. So banking and mid cap, these would be the two sectors where we can see some sort of profit booking. And Neeraj, I would like to highlight Nifty PSU Bank Index chart, because if we see on the daily chart, today's candle resembles a bearish engulfing pattern, and that too after a significant uptrend from 2650 to 3450. So if this bearish engulfing pattern is formed at the end of the day today, and we see a follow-up selling move today, then I think within the banking space, PSU banks would witness some sharp correction on account of some profit booking. So one should definitely be cautious over here, specifically in the PSU banking names. It would not be a reversal of the trend, but it would be just a profit booking move that could see correction by about 5 to 7% in most of the PSU banking names.
Gentlemen, stay on. So much more to talk about. We're taking a quick break on the note that after hitting fresh highs earlier in the day, we have now come off and come off quite rapidly in the last half an hour. On the other side of the break, we get you the Fab 4 stocks of the day. Tell you what dealing rooms are recommending on a day like this when the markets have hit new highs, and some closing strategies from our experts. Also to get you the top fundamental call from Yogesh Mehta. Back with countdown right here on Bloomberg Queen. 26 minutes left for the markets to shut shop, and we're now at the lowest point of the day for the Nifty Bank yet again. So we've slid even further, 190 odd points. We're just talking to Manav Chopra about that. But look at that weakness and pronounced weakness out there in the Nifty Bank. It's taken the Nifty along with it. So after 11,760, this is 11,661. That's about 100 points lost on the Nifty itself. So not turning out to be a very pretty afternoon, despite the fact that we've hit highs or all-time highs in the session today. Just a quick look at the world markets and see what that is doing and whether they have some influence out here or no. No, not really. I think it's turning out pretty similar to what happened on the day when the Sensex hit the highs and then came off. Nifty's hit the highs and now come off too, while the world markets seemingly are a happy place. The Dow futures too about 0.5% higher. So profit booking and maybe the high positions weighing down. The FNO volumes at about 8 lakh crores, not worth those of 8 lakh crores. NSE cash volumes 31,500 crores as well. But I would reckon that this is profit booking that is happening in the markets. Before we get back to our experts, it's time to take a look at the Fab 4 stocks of the day. Not everything is lost. There are some mid caps which are doing well. Let's find out which amongst those have made it to Yash's list of the Fab 4 stocks of the day. Yash, good afternoon.
Good afternoon, Neeraj. Just a handful of names, but I'll start first with Navin Fluorine, and that one is up in trade about 2% on the back of the recent report from IIFL, wherein they have assigned a buy rating and have set a target price of 880 rupees on the counter, which indicates a potential upside in excess of 20% from its previous day's close. Now, what they cite is the strong business model of the company, along with the tailwinds from lower fluorspar prices, as well as the fact that the company trades at attractive valuations, is why they have assigned that rating. Steel Authority of India is up in trade as well, and this comes after the company informed the exchanges that it has managed to post its highest ever steel dispatches in FY19, coming in at about 15 million tons. In terms of management guidance too, they believe that they could do about 21% growth for FY20 as well. So that is another positive. Bajaj Twins are at fresh lifetime high. Bajaj Finserv is up about 2% in today's day of trade. So watch out for that. And lastly, I want to highlight Indiabulls Housing, up 4% today on the back of strong high open interest build-up of more than 12%, which indicates that the traders are taking fresh long positions in the counter. Back to you.
All right, Yash, thanks very much for that. So even in a sea of red, you do have those green shoots coming about in the form of those 4 stocks. There are many more though, but these, as Yash highlighted, are a few of the bigger movers. Sticking to the losers then, and big losses coming into stocks like SL Propack, which is now at 113, that's lost about 7.5%. Religare, which has been in an up move over the last 2 to 3 trading sessions, has given up some more steam in today's session. Amara Raja has picked up a little bit, 6.5% lower from being down 9%. And Vodafone Idea continues to bleed in today's session yet again after yesterday's dip. The stock's down 5.5%. I want to focus on Marico then. It is trading with gains in today's session after it witnessed stable demand conditions and healthy offtake growth in Q4 as per its quarterly update. Agam Vakil is joining us with more details and the takeaways from that update. Agam.
Well, the key takeaway out there from the quarterly 4 update as far as Marico goes is that demand remains stable. And based on that, they are looking at a lot of strength in their major franchises, which will include Parachute, as well as some amount of recovery in Saffola. And on the other hand, there are a few concerns coming through, but on the whole, the management remains positive and fairly constructive when it comes to volumes as well as business in general as a whole for this particular quarter. To take you through specifically with respect to the Parachute rigids, that is where they are suggesting that the growth is in line with their expectations. They're also expecting a little bit of a recovery in Saffola. Do remember it has been really under pressure over the previous few quarters, but this time around they're suggesting that their focused marketing initiatives have worked in favor of Saffola, because of which their edibles oils has also seen an uptick. On the other hand, the value-added hair oil segment is something which has seen weakness for this particular quarter that could move against the company. If you leave these aside, the company also makes a mention of some amount of sluggishness when it comes to the wholesale channels. But save for this, on the whole, the company is fairly constructive on the kind of expectations from this particular quarter. Given the backdrop that both Hindustan Unilever as well as Dabur have indicated some sort of subduedness when it comes to business in general for the industry. So Marico is certainly looking better off in comparison.
Okay, got that, and it's up about 2.5% in the session. Agam, thanks very much for that. Bringing in Siddharth Sedari of Anand Rathi. He's joining us on the show right now. Siddharth, good afternoon to you. And I'll come to you with Marico itself. So, the update was positive. The stock's reacting positively to it. Within the consumption pack, is this a stock that you feel could warrant an investment?
Good afternoon, and thank you for having me on the show. Well, Marico, because of lower copra prices and overall, it's a good stock to be in the FMCG space. But if I pick and choose a particular good stock in the consumption FMCG space, I would like to go with a story which is not moved that much, which is more of an underperformer, and it's a giant and a leader in the industry. That would be Hindustan Unilever. We know the numbers have been coming good. Volume growth has been really sound in the recent few quarters. And we believe that Hindustan Unilever, the kind of per capita consumption today, it's there in India around 1,000 rupees, whereas in the other emerging countries is double the size of India in terms of per capita, and 4 times is the size of China's per capita consumption in FMCG space. So there is a lot of penetration which is available, and HCL would be the best player and the leader to occupy and to get the best pie of this penetration. So we would like to go with HCL with a target of 2250. Marico is also a good stock to be in, but if somebody is holding it, can hold it. But for fresh buying and fresh acquisition, I think HCL would be a better stock to be in.
Okay. Yogesh, before we thank you, your top call or one stock that you would be comfortable investing in?
We were discussing about Marico right now with the gentleman. So I would say that in the mid-cap space, if you want to go for on the consumption story, then Marico would be the one, because we have just finished yesterday the pre-quarterly updates, wherein they have shown strong traction about the hair oil segment, the Saffola segment, and other segments. Copra demand is sluggish now, so this flush season is no more there, and probably 40 to 50% is the raw material cost is accounted by copra. So that is softened now. So that will improve the margin ongoing from current scenario. Even the international business is also doing well in Bangladesh and Vietnam. So those are on a stable growth is there. So we believe that even at 20% or 19 to 20% growth rate over FY20 and 21, we believe that this could be a good story for investors. I'm not recommending for traders, but for investors, it would be a good opportunity again to get into this company at around 355 level today. And with the 10.5 or 10.7 rupees EPS for the FY20 and 9.2 for FY19, it would be again at even if you give 38 to 40 times P multiple, it would be decent enough to get 420 as a price target over next 1.5 year.
Okay, Yogesh, we'll leave it at that. Thanks much for taking the time out and being with us. 257 points lower now for the Nifty Bank at 30,096. Well, another 100 points and we'll break the 30,000 level as well. It's looking pretty precarious for the Nifty Bank in the session. We spoke to Manav about the Nifty Bank. Ruchit, at this point of time now, when we spoke, it was about 0.3% lower. Now nearly 1% lower. Would you initiate a fresh trade on the Nifty Bank?
I think yes, if one is looking only from a short-term trading perspective of next 2 or 3 trading sessions, then the Nifty Bank Index could see a correction towards 29,820 first. And if 29,820 is breached, then the profit booking could get extended. So at current levels, maybe even from STVT perspective, one can look to create short portions with stop loss about 30,400 for a target of around 29,800 tomorrow.
Okay. We'll stay on, gentlemen. It's a good time right now with the markets trading around their day's lows to talk, get a sense of what dealing rooms are recommending in the session today. Yatin Mota and Darshan Mehta are here with their channel checks. Good afternoon, both of you. Yatin, let's start with you today.
Neeraj, clearly today is a session of profit booking, a lot of that happening after we touch record highs, but dealing rooms are not in a sense of panic, apart from the fact that the India VIX has risen to levels of 19. But REC is one stock wherein domestic funds are said to be aggressive buyers in trade. Remember, these are the stocks which are at 52-week highs, REC and PFC, both of them, and dealers are indicating a positive trajectory here for both of these power financing companies. Apart from that, NIIT Technologies is one stock wherein dealers are indicating that there is a lot of long unwinding which is happening in trade, 1340 for that one. And finally, BLF. That is one stock wherein dealers are recommending a buy today, sell tomorrow kind of a strategy based on technical trends, good volumes, nearly 2.5 crore shares traded there. But Darshan has a few more stocks to talk about.
Yeah, so one stock which has managed to move up higher today is Oracle Finance. It's moved up almost 3% in trade. Decent volumes as a buzz of a potential corporate announcement that could come in on the counter, and that's why the counter has managed to spike up in trade. The other stock that dealers are talking about is SRF. The buzz among dealing room is that the plant, probably the H plant which got the issue of the pollution board, that may get a clearance very soon. So that's something that's been spoken about in a couple of dealing rooms. And IndusInd Bank has been doing well in trade. It's down, no doubt it's cooled off because the Nifty Bank itself has cooled off and the markets are cooling off. But dealers indicate that some of the domestic funds are actively accumulating the stock. So that's something I'm hearing.
All right, Darshan, thanks very much for that. So those are a few stocks you need to keep an eye out for. Earlier referring to Vodafone Idea and the kind of dip the stock has seen over the last few trading sessions. Yesterday was down about 7%, today is down about 5%. So big cuts coming in the counter. Heavy on volumes, 54 million shares have been traded there already. But last week itself, the stock's down 13%. Manav, would you be a seller in Vodafone Idea versus a Bharti?
See, to be honest, it's very difficult to take a call where the stock is, it has seen a plunge from its recent highs of 75 and it has continuously been coming at 15 levels. So at this point, it's something that an investor or trader will have to take his own call. But eventually, there is no respite for this. In spite of those short-term trading bounce that we've seen, it has only acted as a dead cat bounce recently, and so far the trend is very bearish. It can see a short odd bounce here or there, but I don't see any structural changing happening for this stock, or even one should anticipate. But on the other side, if you ask me, Bharti Airtel, the formation that it has seen in past couple of months is definitely indicating for a near-term bottom in place. So given a choice, someone wants to do a pair trade, can definitely be long Bharti, and on the contrary be short in Idea.
Okay, long on Bharti and short on Vodafone Idea, which is really under pressure in today's session. Some profit taking even on a Yes Bank. Morning's trade started off closer to 283, now at about 272. So you are seeing that about 10-point differential on the counter. Ruchit, Yes Bank for you?
So although the trend for the stock is positive, but if we look at some of the historical charts, then in the month of September, when we had seen very sharp correction, on 21st September we had seen a huge gap down of about 8 to 10% in Yes Bank, And usually whenever after a downtrend, whenever prices show an up move, such big gaps which are there create some sort of supply over there, and which acts as a resistance. So after this up move, we are quite close to that gap area which was around 287, 288, and if you look at today's high is exactly at 286. So I think some profit booking could be seen, but rather taking any contra call in this. I think traders or maybe if one is looking from a medium term perspective, should look to buy this counter on declines, because the volumes in the recent up move has been good. On declines, if we get the stock around 245, 240 range, then one should look that as a buying opportunity.
Well, the question is whether this buying opportunity will come in a rush or will it be prolonged. Really difficult to call as to what will happen. Then I'll be really interested in seeing what the FI flows look like in the session today, isn't it? All through the last few days, except for I think the last day of March, when there was a small negative number, we had positive numbers. Interesting to see that on a day like this, do the cash market numbers are whether they are positive or negative from the FI side.
Yeah, I mean 31,000 crores in March, already nudging 10,000 crores in the first few days of April. I mean, that's a lot of money that's coming too fast. So, some profit taking obviously is something that most would have anticipated on the back of this kind of liquidity driven rally that we're witnessing right now. We spoke about a few stocks within the oil and gas space, but just to get in your sense right now, most of the oil marketing companies, and Siddharth, I'll come to you with this one, with the Brent crude now starting to nudge that 70 to the dollar mark, doesn't really play out well for the oil marketing companies. How would you position in terms of oil and gas as a pocket? You've given your views on Reliance, but just the rest of the pack. Siddharth.
Is this for me?
Yeah.
Yeah, oil marketing companies, we are a little away from it as of now, and we're keeping it as in the avoid list, because of course the crude prices going up is definitely detrimental for the OMCs. Having said that, we know elections are right in front of us, and there are a lot of things. If let's suppose if oil goes above $75, then some Brent, some part of it need to be absorbed by OMCs also, maybe with a short-term perspective. So balance sheets will not be that great, numbers will not be delivered in coming 1 or 2 quarters. So we will keep ourselves away from this. Companies like Petronet LNG, companies like those companies where there is not much of a volatility in terms of crude prices. I think gasoline and LNG prices are quite stable. Overall, the Cochin facility has also been doing good operationally, better than the other facilities. So Petronet LNG kind of stories which we like in the oil and gas space. Of course, Reliance in the historical base of their businesses in petchem and refining has been doing good. But now I think Reliance, the major stories would be more of Jio and the retail space, telecom and the retail space. So I would like to bet on Petronet LNG as of now in the oil and gas space.
Okay. Let's get in some closing strategies from our experts. Manav, to you first, your top closing strategy.
See, at the current levels, I like to go for a short-term sell, which will be on a BPCL, even though the prices are down by more than 4.5%. But it has witnessed a sharp sell-off with sharp spike in volume in last 30 odd minutes, which is definitely indicating we could see a follow-on move. On the immediate basis, we can have a stop loss at 370 on the upside, but on the lower side, the targets would be at close to 348 to 350 range.
Are you, Ruchit?
I would continue with the positive bias in the IT sector. So TCS has been showing outperformance. So I would recommend going long on TCS from a BTST perspective. One can buy with stop below 2060, expecting target somewhere around 2120 to 2130 tomorrow.
Okay. So, well, those are a couple of closing strategies. Let's talk about while the larger trend has been weak in the last few hours, there are some stocks which are bucking the trend, and Bajaj Finserv is one. We've been speaking of Bajaj Finance all through and through. Finserv at 7,400 is also doing reasonably well. If you had investments here, Siddharth Sedani, would you keep them or would you take some money off the table? Bajaj Finserv.
Well, we are not constructive of Bajaj Finserv. In fact, we like Bajaj Finance in the consumer finance segment. This is, we would say, it's the best company to be in. Looking at the kind of complete distribution network it has, if around 85 or 1,000 showroom and outlets where it has its own presence. Strong numbers, we know 40-50% of loan growth which has been coming. Last quarter it was a 40-45% kind of a profit growth which we have been seeing. So we would like to bank on companies like Bajaj Finance, which is evergreen stock to be in. It's been rallying since a long time, and we believe still the growth can persist going forward. So we like companies like Bajaj Finance with a target of 3370.
Okay. Bajaj Finance, they're currently trading at 3,054. Yesterday's big loss that came into Cyient pulled it down about 11%. Should pull up that counter in today's session to see what it's doing. Just a marginal uptick of about 0.5% is what you've got on a Cyient at 583. Ruchit, a big clamp down in yesterday's session. Slight recovery today. Do you play the upside from here?
Not really, because if you see the stock, after this recent pullback move in the early March, the stock has again resumed its corrective move, and the volumes on the down moves are quite huge. So I think whenever we see the stock prices correcting with the higher volumes, and also if we see the broader markets have shown a very good up move in last 1 month, but then too the stock is trading around its 52-week low. So this is an underperformance, and because of the higher volumes on corrections, I think this underperformance is likely to continue going ahead.
So that come to you on not just Cyient but the entire IT pocket, now that we're going to be seeing the Q4 numbers start to come out, kick-starting with Infosys on the 12th. What's the gauge here in terms of what you're factoring in for Q4 and the entire year?
We feel very selective. A few stock-specific one can bet on, because the numbers will not be as good as in the companies like HCL Tech, which we like, and we believe that HCL Technology, the kind of deals which they have completed last quarter, it was the 17 odd deals which they had completed. Margins have been good. Overall, constant currency wise also they've been growing good. So HCL Technology would be one of the stories which we like. Along with that, in the mid-cap arena, what we like is NIIT Technology kind of stories, because it's not a generic IT play. It's more of a specific sectoral IT play. If I talk about NIIT Technology, they are more focused towards transportation, so on and so forth, and those industries which they are focusing more on. We like NIIT Technology. They're the constant currency. If I compare it with other mid-cap peers, they were the best in terms of doing the constant currency growth. So we like NIIT Technology, maybe with a target of 2,000 rupees. So these are the very selective plays which we are liking. Of course, on a techno funda basis, TCS is also one of the plays which we are liking with a short-term perspective. But if with an investment point of view, I would like to bet on two stocks on in the IT space on the basis of results only, is HCL Technology and NIIT Technology.
Okay, we will leave it at that. Thanks so much for joining in, Siddharth Sedani, with your thoughts. Appreciate your time.
Thank you.
Well, amongst the IT names which are doing well today, very far and few in front between HCL Tech is the one which is marginally in the green, so do watch out for that one. At the broader end of the spectrum, stocks which have done well, and we'll talk about them in detail, include an Orient Cement and a Siemens, so both of them are up and about. What's gone down? Amara Raja, SL Propack, and to an extent JSW Energy. Actually, all marketing companies are the other lot. Manav, quick thoughts out here. If you looking at BP, HP, IOC, all three of them have corrected and corrected quite soundly today. Which chart is the weakest?
See, I've already given a STBT on BPCL, and if you're looking at the oil marketing as a company, these lots are definitely looking weak. If you look at the chart also for the crude on the international basis, it still has a potential upside of 3 to 4% on a very short-term basis. So keeping that in mind, BPCL is definitely a sell at the current levels. And if you're looking also the chart of Hind Petro, this stock, both Hind Petro and BPCL are equally looking bearish, but I'll definitely bet on BPCL.
If we haven't spoken about Amara Raja already, 673, 6.5%, the top loser on the Nifty 500. What do the charts indicate? Some more downside? Richard, the question is for you.
Yeah, so no, we have seen that the previous lows of around 683, 690 have been breached, and even the volumes are quite high. Secondly, even on the pullback moves in last one and a half month, the 200-day moving average had acted as a resistance, and the stock was unable to show any kind of outperformance within the broader markets. So this underperformance is likely to continue. As far as levels are there on the long-term charts, the initial support is placed around 630, which is about 5-6% down from current levels. So we could see this 630 getting tested maybe next few trading sessions itself.
Okay, Jaman, stay on. We'll take in final thoughts from you, but it turns out to be a somber day of trade. One would have thought that at the end of the day, we'll all be rejoicing, or the bulls will be rejoicing the fact that we hit life highs. Well, we did, marginally by a whisker, a point higher, but post that, we've corrected nearly 100 points, actually slightly more than 100 points, 120 odd points from the highs of the day. So it's not turned out to be a very pretty afternoon, you have to admit. And the mid caps and the small caps too, while the market breadth had already worsened when we started the show at 2, about 1% loss for the mid caps and the small caps. So it's not looked a very pretty picture out there as well. Devina will speak about all of these. Let me talk about the large caps first and what's moving and what's not in the session today. So on the gainer side, Maruti Suzuki stands out. Yes, Indiabulls Housing Finance also has done well, but Maruti Suzuki stands out, northwards of 7,000 for that one. Strength in Bajaj Finserv, not so much in Bajaj Finance, but Finserv has done well. HDFC has lent that bit of helping hand to the markets. Maybe HDFC Bank too marginally in the green. So they have kind of helped the markets stay okay compared to what it would have been if they would have been in the red. What's lost out? All marketing companies, BPCL and IOC. Z, this is arguably one of the worst weeks in the recent months since the agreement was reached. 3%, 3% and 4% respectively for Z in the last 3 days. State Bank of India and Yes Bank correct a bit in trade. L&T corrects a bit in trade, and Sun Pharma amongst the other stocks which have lost out in the session today. So not a pretty afternoon for large caps, but that's an understatement because the mid caps, wherein the market breadth was positive at the start of the trading day, Devina, currently as we speak, very, very adverse.
Yeah, I think it's more than 1:2 in favor of the declines right now for the mid-cap space. Let's start off with the losers then, and Amara Raja stacks up right at the top of the Nifty 500 losers. The stock gradually losing momentum, was down almost 9% in intraday trade from where it's come up a bit, but still down about 6.5%. Religas sees some profit taking. The stock has been up over the last 2 to 3 days on a trot. And big gains, so profit taking on the count of 5.5%, stocks down. SL Propack is the other one. Following that, you have pain in banks and your mid-tier banks. Syndicate Bank is down, PNB is down, Union Bank is down. These are all the names that are witnessing weakness in today's session in light of what the bank nifty itself is down with the larger banking names. Amongst the oil marketing companies, while you have BPCL and IOC on the index, HPCL falls in the bracket of the mid-cap index, so that stock's down in trade today, 4.5 to 5%. So one of the worst hit within the oil marketing pack. Jet Airways, more fleet getting grounded. The stock loses some steam in today's session as well, 5.5% by close. And Inox Leisure, the stock sees some profit taking as well. Well, all hope's not lost. There have been some stocks that have not done badly in today's session, which includes the likes of Deepak Fertilizers, which has been up in trade today. The stocks, this is Deepak Nitrile, I'm talking about Deepak Fertilizers. Deepak Fert is up about 5.7%. Orient Cement is the other one. Future Life, Siemens, REC, and Magma Fincorp and SAIL. These are the names that have done well, but the gains obviously not as pronounced, but still not bad, about 2.5 to 3% a piece for these counters. So markets on Wednesday not particularly what we would have hoped for, considering the start of the trading session. But you'd probably count this in a day where you've actually seen a pause or a break to the rally that we've been witnessing.
Yeah, that's the summary essentially. And nothing more to add to that. Maybe we just dissect how the last half an hour last 1 hour have added to the volumes, to the declines, because that's essentially what the last 1 hour has been today, even though it would go down as the day where we hit the highs. The market's just about getting ready to close, but we should bring up the volumes and just see first what's happened out there when the Nifty Bank has closed about 1%. 10 lakh crores, and the cash market volumes 36,000 crores as well. So
at the higher end.
At the higher end,
yeah.
Certainly.
We'll see what numbers get thrown out tomorrow from the FII side as well. Let's take a look at the contributors then, and no points for guessing. Oil marketing companies, oil and gas's pocket has looked weak, so Reliance Industries stacks up there. ICICI Bank looked weak, and so did SBI. Gainers, Maruti Suzuki, a tremendous pullback from the stock for the stock from levels of about 6,500, which it witnessed just recently, come back to about 7,000 plus. Indiabulls Housing, second day on a trot, the stock's doing well.
Yeah, certainly doing well for itself. And the market breadth, of course, as we said, was already wobbly, and I think it would have widened further, close to, look at the yawning gap. It's almost turned around compared to how it started off with. A lot of green, very little red, and then a bit of a twist, close to 2:1 in favor of the declines. Not something that we would have thought of at the start of the trading day. But final thoughts from our experts. Can the Nifty go down further from these levels, and what do the charts indicate? Manav, we'll start this conversation with you. We spoke about the Nifty Bank. What about the Nifty itself?
See, the support for Nifty is at 11,600, and we are quite close to that support, and once if you break that support, we would be closing below its short-term averages and also likely to close the recent gap pattern. So definitely, if that happens, we could see some corrective declines, and I think below 11,600 the next support comes to 11,450. So that would be the levels of next support where we can see a corrective decline, and that could also be a 38% retracement. So in a good uptrend, 38% retracement is a fair decline that one can definitely expect, and that could be the minimum. I mean, 11,450 is on the immediate basis that we can expect if 11,600 is violated.
And Ruchit, based on the FNO indicators or otherwise, what's the probability of the Nifty having a serious correction in this pullback, or would you reckon that it is what we just or what some people would just say, a pullback before the resumption of the uptrend begins?
Neeraj, already there are a couple of signs of divergence. The two signs that we spoke about at the start of the show. One is the negative divergence with the RSI. On 20th of March, we had hit a high of around 11,550, a post which we saw 2 days of corrective decline. Then the index has crossed those highs of March. The index have hit an all-time high. But if you look at the RSI readings on the daily chart, on the 20th of March, the RSI was around 72, and today it is around 68. So in spite of the higher top in Nifty, we have a lower top in RSI. So this is one of the negative divergence. Secondly, look at the market breadth from in today's trading session. The market breadth has clearly turned negative post hitting this all-time high. So these are a couple of divergences indicating this a profit booking move could be seen. Now that may not be a reversal of the trend that we have seen in the month of March, but definitely if we see some sort of profit booking and some retracements over here, then 11,450, which is the 20 days exponential moving average, should be tested in near term. And among sectoral specific, Neeraj, whenever there is a profit booking, so before profit booking, the sectors which have shown outperformance, they tend to correct sharply. So banking and mid caps, these are the two outperformers. So I think if there has to be profit booking in next few trading sessions, then banking and mid caps would see some good sell off. And IT as a sector has been showing good strength. The volumes in large cap IT such as HCL Tech, TCS have been good. So I think IT would continue to outperform.
Right, gentlemen, we'll leave it at that. Thank you so very much, Manav as well as Ruchit. Appreciate you both taking out the time this afternoon. And with that, let's wrap on this edition of Countdown. Unfortunately, we haven't closed at the record high, in fact, in the red. But like they said, it's not a trend reversal, it's just profit taking. So it's too soon to start worrying. Yeah, for the bulls at least. But you never know what happens. Call it a day on this leg of Countdown. From Devina and me and the team that put this show together, thanks so much for watching. Stay tuned, the market wrap with Agam coming up next.